Well, the uncertainty is certain. Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of April 27, 2020. And man, there's just all kinds of news to absorb, and the market is trying to absorb that and respond to that. And currently, the market is responding to good news, pretty positively, and I'm a big fan of optimism and hope, but I think the optimism is going to be short-lived, and when the full impact of the economic impact of the shutdown really begins to play out, I think we're headed to new lows in the market. So for the last couple of weeks, you can see we've been up and down in a fairly narrow channel. I'm showing the S&P 500 on a daily chart here. And, there certainly has been relatively good news with, the curve getting bent and all the positive things that are happening. And certainly, several states working on, plans to reopen, and that's all good stuff. And, I'll leave the commentary on that to the pundits, whether it's a good idea or not. I'm going to focus on the realities of the technical analysis of charts in the market. And the current reality is, from all-time highs, the market had a historic drop, and then it's come back up, and then it channeled for a couple weeks. From a technical perspective, this is a classic correction, an Elliott wave A, B, and then C down to new lows, and that is my expectation as, again, the realities of the impact of the shutdown, just begin to ripple through the economy. And as earnings reports come out and companies give forecasts, that we're just on the leading edge of earnings season, so more information's coming, and there are other signs in the economy. Clearly unemployment's a huge problem, and how quickly can people get back to work and begin getting paychecks, and the economy get rolling. The stuff that the Fed's doing, the federal government, with stimulus and all kinds of help, that's all great, but we'll just see what kind of impact it has. Other things are, you can read articles about disruptions to the supply chain, and that's just going to take time to backfill that. Even if manufacturing starts back up, refilling the supply chain is going to take time. Those are pretty finely tuned systems. Agriculture, farmers are plowing under crops because there's no market to, lettuce and strawberries and squash and whatever. There's just no market, and so it's really sad to see, good quality ripe crops getting plowed under, and that just creates incredible disruption. So and then the oil market, don't even get me started on the oil market. There's just incredible disruption, and here's a headline that I thought was pretty important. The U.S. economy faces a historic shock, with 16% joblessness possible or more. And I think that's a reality, and that the market's going to come to grips with that reality, and again, break out of this channel that it's been in, the channel of admirable optimism. But I believe sentiment will shift, and we'll go on to new lows, down below the low that we made back in late March. I could be wrong, but that's my prediction. Really, the key is watching this channel in a break. I've drawn an upper boundary line, a lower boundary line, and if it breaks to the downside, look out below. And there's going to be trading and profit opportunities in that. Certainly don't wish ill will, don't wish bad things, but if the market's going to go down, we're going to profit from it. If it does break to the upside, I think the upside potential maybe is around this 200-day moving average on the S&P 500, around 3,007. I think the higher probability is reality setting in, the impact kind of taking hold and on to new lows, and it could be dramatic, and we'll be ready to profit from that when and if it happens. Meanwhile, the overnight futures are a little bit bullish. S&P 500's up about 9.5 points, 0.34%. That's not very strong. Again, a bit of optimism on progress in fighting the coronavirus. That's great. Oil, it's just been crazy, and I continue to believe that there is a historic buying opportunity in oil. Look at the USO that I'm showing here, trading at $2.57. You can read articles that talk about USO is going to go broke and fold. I don't think so, and I think this is a buying opportunity of of a generation. You got to be patient, and I like buying leaps, long-term options on USO, and from 257. If this thing goes back up and retraces just to $8 or something, that's going to be a stunning profit for long-term options. So I'm in those, and I may even get some more. So that's what I'm looking for. Recovery in oil. It may take time, may be volatile, and new lows on the indexes. I'm showing the S&P 500. The NASDAQ, the Dow, the Russell, I think are all going to follow this pattern. I've actually got a trade ready to go on Russell if we break out, and I'll be trading IWM. Looking for a break down below, same kind of channel. Here, this blue line, 114.55. I want to see that proven, and if it happens, there's going to be a great trade coming. It could be wrong, but I think probability is on my side, and again, I'm just trying to trade the realities. I'm waiting to let that be proven. I'll be happily give up a few points of entry to increase my probability of a win, and there's plenty of profit potential if it gets there. So that's my update. I'm looking for the reality to set in of the economic impact and to new lows on the indexes, and looking for ways to profit from that. I've been focused on the indexes here in this update. There are individual stocks that will have a bigger percentage move and present bigger opportunities, and we've got some trades teed up that I'll be ready to take if that happens. All right. Trade safe, and as always, send me your questions, comments, and feedbacks. Thanks.